I can't sleep at night. I toss and turn, thinking about my options trades. Better get on logging in and checking on how things are going. Here we are on a Thursday, April 27th, 2023, 9:48 a.m. Central Standard Time out in the farm fields of Valparaiso, Indiana. Don't call it a comeback. SPY trying to make a little comeback from yesterday's sell-off. A little bit of selling going on across the board except for that NASDAQ because, those tech stocks, they're having some nice earnings reports. Amazon reports today. That'll be a big one because it's a little bit different scenario than Meta and the Google and also Microsoft. Amazon considered a tech stock, but they have to make real sales with real people to deliver real packages. It will be interesting. If they beat as well and have good guidance, then hello. Should be a good day tomorrow as well. So they will report today after close of the market. But looking across the board, S&P 500 up almost 1%, Dow Jones 0.68%, NASDAQ at nearly 1.5% up. Even that old Russell 2000, 0.26%. And our friend, the crude oil, up 0.42%. But still, my friend Valero, they had an earnings report this morning. I thought it was great. Is this it still? No, that's something else. Never mind. Don't look at that. Don't look at that. I was just looking at a Robinhood report from March and all of the trades, listed out, even though I keep track of them over in my options spreadsheet. What is this? That's April. So I keep track of all of them. So I know how many there are. Like, for instance, 432 contracts I traded in March. And that is the spreadsheet. So I was just looking at the math between what Robinhood had and what I had. And it's a little bit off to the green side. So I'm going to be sharing that with you soon once I figure out. I may have missed a trade or two in here and not reported that premium on my spreadsheet. But anyways, we got to look at the big board. Let's take a look at the big board because I have some management to consider. Okay, so if we look from this UPS credit spread up, these are all of the positions expiring tomorrow. So AMD is currently in a battle right now. This $85 put is been going in and out of the money. So currently it's almost trading up to $86. So I may not have to do anything. But if it comes down and by the end of business tomorrow and it's just under 85, I will just take the shares and then begin the official wheel on AMD because I've been, for some reason, I don't know if it's my scarcity based mindset, my fear riddled subconscious mind that kind of prevents me from running the actual wheel. I just keep rolling things in and out and up and down. Why not just take some possession of these companies if indeed you are living by your own rules? What's the rule? Well, the rule is I shouldn't be trading anything that I wouldn't be willing to own. And I got burned big time doing that. I thought it would be fun to trade some high volatility stocks for some premium, some big time premium. And then I got caught with my hand in the cookie jar and then took a series of thunderous kicks to the cookie bag by Signature Bank of New York. And I left that transaction $42,000 to the poor side. So why aren't you crying more? Well, I thought it's just I guess it's like it's me paying for the girls going to Purdue. I have to pay for their education. Well, Signature Bank made me pay for my education, and that education said, don't trade anything you don't want to own. So when I was trading Dish Network and Domino's Pizza, Signature Bank, and a handful of others that had super high premium, I didn't want to own any of those companies. So I found out the hard way that that rule should be abided by. So here we go. AMD, I'd be happy to own them. So we'll keep an eye on that. That expires tomorrow. Blackstone puts, I got a handful of things on here that you didn't see because I was watching baseball. I was watching baseball and making trades on my phone, watching my sweet Cubbies. Go Cubs, go. Go Cubs, go. Hey, Chicago, what do you say? What are you going to trade today? That's not the words. It's not, but it's my words right now. So I put on this Blackstone put credit spread yesterday, 82 slash 79, and we have Blackstone up today. So that is looking good. Currently, there's 5 of those, right? So if we wanted to close them, we don't want to close them at this moment. So if we wanted to close them, it cost us roughly $70, and we collected $115. So those will ride. We'll let those ride, but we will keep an eye on Blackstone. Currently, we're pretty safe, but that can change at any moment. Caterpillar put is under pressure. Caterpillar, and this is how, I don't know, is it nerdy, dorky, or lame? As I walked the track today at the YMCA, I listened to the Caterpillar earnings call. Boring. It was boring, but there was some very interesting information, I thought, and it sounded great to me, but apparently, what do I know? Because the market said, not so fast. Caterpillar, you are downtown to Chinatown, 4%, currently trading at 207.64. So I am under pressure. So we'll be looking at the same theory, same scenario. So if this is prepared to close under the 207.50 tomorrow and I'm assigned those shares, as long as it's close, I'm going to just take it. I'm just going to take it, and I will have those shares and I will begin selling covered calls. That's called the wheel. That's right. You keep talking about the wheel, but then you keep avoiding the wheel. Now, the kitty cat credit spreads, that is, of course, under pressure as well, but we have a little bit more safety in there at the 205. So we'll keep an eye on that as well. Because if we wanted to manage our way out of that trade right now, again, it's a company that I would enjoy owning, but you never want to overpay if you don't have to. I could always, though, as my friend Brian has eloquently pointed out, I could always sell. I could always sell out the long position and collect some dollar bills and then roll the short position or just take possession of the shares. Right now, we're going to let it ride, as I think, again, it's an overreaction on the market's part. In fact, Caterpillar has already bounced, hasn't it? It's already bounced a bit. Let's look at the stock itself. It was down more than that. Here is Caterpillar. Let's go 1 day. 1 day view. Whoop! All the way down here to 205.59. Bounce back up to 208.75 and now currently at 207.08. So we got to keep an eye on it. Yeah, we do. We got to keep an eye on the Caterpillar. Got me under pressure. The Ford puts, Ford is up just a little bit today, which has given me some breathing room. So we'll let those ride as well and just hopefully expire at full profit. I'll take those shares if I have to, but I would rather have AMD and Caterpillar over Ford right now because we already have a position in Ford. And then on the Marathon, we've got a Marathon Petroleum put credit spread right here, 119/116. And even though Marathon's down today, and as you can see, because they're down, the cost of closing this is going up. Another company that I'm perfectly happy to own. Should be some, not as much volatility on that long leg as I thought. I figured there'd be more premium to collect there, but we'll keep an eye on that. We're still good to go, but we have to watch it. And then we have Target. I put a Target credit spread on as well yesterday, 152.50. 150, and target is trading up today. It's at 156.35, so we look good to go on that trade. What did we collect? 140, and we just put it on yesterday afternoon. So $140 bills there. That's very nice. We put on a UPS credit spread, and UPS has been making our butt stink because we do have another credit spread expiring next Friday. I believe it's a 175, 170. So it's very much under pressure, but this credit spread doing good so far, so good, expires end of day tomorrow, and we collected $105. Another company that I would be just fine owning. Then we get into this one, and I think we may manage it right here and right now. ABBV. Obviously, I don't know what I'm looking at on the earnings reports or in the listening to earnings calls because I thought it went fine. I thought AbbVie was fine. Hello. Let's see here. And according to today, it's not fine. It was all the way down to 148.36. We got to update that. That's not right. 147. No. It is currently at 148.07. So that means we have trouble a brewing. We have a trouble a brewing. Let's see here. So they did miss by 3 cents on their earnings per share. There was an estimate of $2.46 for quarter one, and they reported 246, and it missed by 3 cents, and then revenue of 12.23 billion was in line. But they have some patents going downtown to Chinatown, which opens it up to the generic drugs. But they have some good drugs in the pipeline. So if we look at AbbVie over here at the dividend tracker, this is a new little tracking software website, whatever you want to call this, that I'm really enjoying. And I did pay for the premium. And if you have interest in the premium, I'm going to leave a link in this video. You can click through it, and then you'll pay the same price, but I'll get a couple dollar bills that I can hand over to Sparkle to buy a Starbucks. So that'd be really sweet of you if you were interested in the dividend tracker. I'll probably once I know how to use it a little bit better, I will provide an overview video. But if you see AbbVie, they have a dividend grade of 86. They have 11 years dividend streak. Dividend payout ratio is low. The yield's pretty good. Market cap huge. Why does it say I own 405? Where's that 5 shares from? Do I have 405? If you don't know, you got to start paying more attention. The beta is low, meaning that it doesn't move a whole lot on a normal basis. It's moving a lot right now because of the volatility of the earnings report. Net margin above 20%. That's always a good sign. PEG ratio, anytime you see PEG ratio, which is price to earnings and growth ratio, close to 1 or under 1, it's like, hey, that's pretty good. Price to sales, I don't know, that's okay. PE ratio is high, but it's in line with the industry, with the sector. Shares outstanding going up. That's not what you want to see, though. You want to see that going down because you want to see the company buying shares back. But look at that revenue growth. Hello. Stair-stepping its way on up. And they had revenue growth, again, projected for this year. So we'll keep an eye on it. I'm fine owning more AbbVie. We've got some AbbVie now. Apparently, we don't know how many shares we have. It says we have 405. I don't know about that. Where'd it go? There it is. Okay, so what I was thinking on this, let's first check how many shares we have. This says we have 200. I don't know. I'll have to monkey around with that dividend tracker to see what's going on with that. Okay, so here's what we have. Currently, AbbVie trading at 147.95. Okay, So that looks like real trouble, taking a lot of gas on this credit spread, right? So to close out of the short side of, let's get into it. To close out the trade period, we'd have to pay like over $1,000, right? $1,115 if we wanted to just bail on it and hit the abort button, and we only collected 150. Well, I don't want to do that. I think it's an overreaction. I may be completely wrong, and it just keeps tumbling down. The stock price just keeps tumbling downtown to Chinatown. I don't think that's the case. I think it's an overreaction. So now, again, this is a risky maneuver. Thanks for warning me. Now I'm scared. You've scared me. This is a risky maneuver. So to close just the short side of this, we would have to cover a debit of approximately $735 times 5. Okay, so what's that math? Now it says 750, so it's getting uglier. 750, okay, times 5, it's actually times 500. So 3750 is what it would cost us just to close this side of the trade, the short side. That's why we have the long side. We bought the 152.50 put to act as the bomb shelter, to act as the safety net, because it's only the spread between these two that we actually have in danger, because we can just let this thing ride and it crushes through it, which it already has. It crushes through both of these strike prices, and then what we lose is our collateral, right? Which would be the difference in these two. So our collateral on the trade probably says it somewhere here, but I like to do the math myself. So it is a, if we take 155 strike and then we subtract the 152.50, we have $2.5 wide position. Okay. And it's 100 shares per. And then we have, so we would times it by 100. That's 1,000 times 100. So it's $250 per contract that we have up for collateral that is at risk. And we have 5 contracts. So the max loss is 1,250 minus the 150 that we've already collected, because that's already in my pocket and Sparkle's already spent it. So max loss is $1,100. Right? So why pay $1,175? I don't know. I wouldn't. Well, it has this way up here. So we could close it if we wanted to close it and try to get it filled at like what? $2. It'd be 1,000. So we'd save $100. But we don't, I don't think we want to do that. The risk, though, that I'm about to consider would be to sell this closed and take all that credit and put it in my pocketbook. Okay. So we could get like maybe 485 per 5 contracts, and then we would be credited $2,425. That would go into my pocket right now. But then it removes the bomb shelter, it removes the safety net, and those 5 contracts at 155 are suddenly on the board, and the collateral for that is then swept aside, right? So it'd be 155 times 100 times 5. So it'd be $77,500 then in collateral that would be taken by Robinhood and put on the sidelines, and then make me vulnerable for that position. So I would then watch it and then roll it. I'd watch it and then roll it. And in fact, if ABBV makes a bounce back, and I'm not saying they're bouncing back between where they're at today at 147.95 and 155 by next Friday, but I am saying over time. What are you saying? I'm saying they will bounce back over time, and that's just a thesis based on tracking this stock. Anytime your stock appears up here, something is either really good happening or really bad. And 3 of those 5 are my stocks. What's Mo doing? Let me check because they reported earnings also. What's Big Mo doing? Next to nothing, which is what they normally do. So let's go back to the ABBV. I want to just let's take a look at what they've done so far year to date because they got to. This has to be real close, if not the lowest to year to date. That 148.10. So they were at 147.35 in March and 144.61 on February 8th. So they're getting close to their low of the year. You know, they have that nice dividend, as we talked about, 3.66%. And then if we also considered with it dividend yield theory, we like dividend yield theory, go up to our dividends. And if we look right here, okay, 3.66% forward dividend, which of course changes by the moment based on their stock price. So as it goes down, dividend yield goes up because the annual payout is fixed. It is fixed. And they probably still will be raising it this year. Okay, so let's just see when the last time they raised it. So they've already raised it. So for the rest of the year, they're going to be paying that fixed dividend $1.48 per quarter unless, something hits the fan and they have to cut, which isn't going to happen. You never know, but it probably isn't going to happen. So if we look at dividend yield and apply theory, wait a minute. You did it again. You fell for your own trap. So dividend yield theory states that they're overpriced. I was expecting to see that currently they were underpriced. So if current and forward yield is higher than average, then that, according to dividend yield theory, states that the stock is underpriced. But this is showing us that it's under the average, which would state that it's overpriced. This is a you're gonna have to hit the edit button or just throw this video in the garbage. I won't do it. I like to publish them all just so that we can begin to learn these things together. Let's do that together. We shall. Because over time, doesn't this become a safe company? It does. It becomes a safe company, and their dividend grade, 86, is safe. What do they say on the dividend safety here? AbbVie's dividend safety. Why is there so many red ones? But look at net income margin, A, return on common equity. Those are things we're interested in. A plus, cash from operations, A plus, cash per share, B. Those look like all of my gym grades right through there. Then we get into science and math. So here we go. Just look at these over here. These dividend grades: safety B plus, growth A plus, yield A, consistency B. Now those help me sleep at night. I toss and turn. So should we do it? Should we remove the safety net, or should we just watch it? Let's watch it today, probably as late as tomorrow, and then we'll make our move. We'll decide what we want to do. We shall decide. So that's what's going on here. I'm just trying to wrap my mind around what the action is today. We look pretty good one way or the other on our positions that are expiring tomorrow. Things can change in a heartbeat. We know that. I've got some positions next week that we just talked about. The big one is ABBV, taking serious gas, doing good on our city group. CVS is, where are they at right now? They're still above 70. Ooh, 72.42. They've gone up a little bit today, but because of time, it's still under pressure. We collected 360 on that. Oh, it's 10 contracts. No wonder. That's called risk. That's all right. Well, again, with CVS, we'll take 1,000 shares. I don't necessarily want a $70,000 position in CVS, but we would take it if we had to, because we want to collect dividends from companies that we want to own long term and can also wheel and spin that wheel of fortune. Now we got a lot of action going on next Friday. Most look pretty good. What's Qualcomm doing? 112.86. So they're down 1.14% today, but still another company that we would own. We would own that. All right, so there's our beginning look. Let's look back at the SPY and the S&P 500 before we go. Still in the green. So we're green across the board, although Russell just flashed down 0.01. So they're basically unchanged. Thanks for tuning in. Make sure you do subscribe to the channel. Because if you're watching and you're not a subscriber and you're like, hey, this isn't bad, this isn't horrible, I could watch this, please just click on the subscribe button. Like the video, leave me some comments, share this with some lovable friends, and I'll see you in the next video.